Hey there, welcome to Tallied. I'm Kiran, and in today's video, we are going to learn equivalent production using weighted average method. If you have watched the previous topics from this chapter, process costing, and also know about the cherry on top quiz, then go ahead and skip to question 1 using the timestamps in the description below.
So far in this chapter, we have covered introduction to process costing, how to prepare a process account, accounts after a process account, and equivalent production using FIFO method. Today, our agenda is to learn equivalent production using weighted average method.
After watching this video, do take the quiz in the description below. It will let you know if you're clear with the concepts and this topic. I will be going in a pace where you can solve along with me. The timestamps are in the description below to help navigate yourself. I've explained the concept of equivalent production in my previous video. Do check it out if you haven't already, because we will be using this concept in today's topic as well. So if that's clear, now let's get started. Here we have question 1. Let's first read the question. From the following information relating to process 1 of a factory for the month of April 2018, prepare the statement of equivalent production, statement of cost per equivalent unit, statement of evaluation and process account. Opening work in progress 1000 units, material rupees 27,000, labor rupees 8,000, overheads rupees 12,500, and a total of 47,500. Costs incurred during April 2018, input of material 28,000 units and a value of rupees 5,75,100. Labor rupees 1,19,150. Overheads rupees 1,78,225. Process loss. Normal loss 10% of total input. Value of scrapped unit is rupees 10 each, which is rupees 10 per unit. Actual units scrapped during April 2018 is equal to 3,000 units. Degree of completion of units scrapped, materials 50%, labor and overheads 30%. Closing work in progress units is not given. Degree of completion, materials 100%, labor and overheads 70%. Processed units transferred to process 2, 24,000 units during April 2018. Now, before we go on to solve the question, it is important for us to know when to use which method. Are we supposed to use the FIFO method or the weighted average method? So let's compare two questions. So on our left-hand side, we have a question that pertains to our weighted average method. And on our right-hand side, we have a question that goes for FIFO method. Look closely and see if you can find any difference. You might notice that in our FIFO method question on the right-hand side, they have given us degree of completion for opening work in progress. That is, we have been given that materials 80% has been completed, labor 60% has been completed, overheads 50% has been completed. And this is not the case for weighted average method. In our weighted average method, we are only being given the costs. The process of materials in opening work in progress has costed us 27,000, labor 8,000, overheads 12,500. We have not been given what percentage of work has been completed on these opening work in progress units. So if we are given the degree of completion of opening work in progress, we follow FIFO method. If it is not given, that is, if we are not given degree of completion, then we use our weighted average method. So if this is clear, let's go right into the question. So first we have opening work in progress. So in our particulars, we will write opening work in progress. It's given that opening work in progress is 1,000 units. So we will write 1,000 as the input. Now, as for the output, since we don't know what percentage of work is being completed in our opening work in progress in various stages, we will not write this output value. So we will write an input value of 1,000, but not write anything in our output column. Next, we have raw materials introduced. So raw materials introduced is given as input of materials 28,000 units. So our input is 28,000 units. Next, these 28,000 units will go on to become our finished goods. Let's see what quantity is given for finished goods. It is given that processed units transferred to process 2, 24,000 units. So the number of units transferred to process 2 is our finished goods and it says 24,000. Here, you need to remember that in our FIFO method, we would normally subtract our opening work in progress and then write the remaining in finished goods. But this is not the case of weighted average method. So this is our first difference between the two methods. So in our FIFO method, we would write output for opening work in progress in the output column. So this 1,000 that we write in our input column, we would also write in our output column as 1,000 in the FIFO method. And while writing finished goods, we would take 24,000, which is the units transferred to process 2, minus 1,000 and write 23,000. This is the case when it is FIFO method. But when it comes to our weighted average method, since we don't know the degree of completion for opening work in progress, we will write no value in our output column of opening work in progress. At the same time, when it comes to finished goods, we will take the value exactly as it is from the units transferred to process 2. So we will write 24,000 units for our finished goods. Let me quickly summarize that. So in our FIFO method, we would take opening work in progress in our output column, and while writing our finished goods, we would take units transferred to process 2, subtract our opening work in progress from it, and then write the remaining value. But in this case, we will not write the opening work in progress value, but we will take the entire 24,000, which is given as units transferred to process 2, and write it under output of finished goods. So now we will write what percentage of work is completed and what equivalent production unit it is. So we know that finished goods, all work has been completed. So 100% work is completed for materials, labor, and overheads. So this means the number of units will be 24,000. Next, we have normal loss. So in our question, it is given that normal loss is 10% of total input. So that will be 10% of 28,000 plus 1,000. So it's 10% of 29,000. That will be 2,900. We have already discussed that we assume no work has been done on normal loss units. So this will be 0% and the units will be 0 respectively. After this, we have been given that our actual units scrapped is 3,000. So to find our abnormal loss, we're going to do units scrapped minus normal loss, which is 3,000 minus 2,900. So we have an abnormal loss of 100 units. We are going to write now. Once this is done, let's see how much work is completed for our units scrapped. Materials 50%, labor and overheads 30%. So we write 50%, 30%, and 30%. So 50% of 100 is going to be 50, 30% of 100 is 30, and another 30% of 100 will be 30. If this is clear, I'd also like to mention that when we were doing our FIFO method, we had to remember that if degree of completion was 70%, then we would write 30% here, because 70% work has already been completed in the previous year and 30% work is left for this year. But in our weighted average method, that is not something you have to worry about, because we don't write our degree of completion or units for opening work in progress. Now our last figure is our closing work in progress, and we have not been given the units. So to find the units, we're simply going to tally the input and output columns and find the difference. So on our input column, we have a sum of 29,000, and on our output column, we have a sum of 27,000. So there's a difference of 2,000, and this will be our closing work in progress. Now let's take a look at the degree of completion for closing work in progress. We have been given that degree of completion for materials is 100%, labor and overheads is 70%. So let's quickly write 100%, 70%, and 70%. So 100% of 2000 will be 2000 itself. 70% of 2000 is 1400. So let's quickly write 1400 for overheads as well. Now let's sum the units to find our equivalent units for materials, labor, and overheads. So for materials, we get a sum of 26,050. For labor, we get a sum of 25,430. And finally, for overheads, we get a sum of 25,430. Now let's move on to our second account, which is our equivalent cost per unit. This is where lies our second difference. Normally, in our FIFO method, we would simply write materials, write the amount of 5,75,100 and subtract normal loss from it. For labor, we would write 1,19,150, and for overheads, we would write 1,78,225. But when it comes to weighted average method, there is an extra step. Let's take a look what it is. So first we write materials, and the extra step will be our opening materials. So here we add opening work in progress cost in our statement of equivalent cost per unit. So along with the material cost of 5,75,100, we also have to take in consideration the material cost for our opening work in progress. So our opening materials will be 27,000. So we will write opening materials as 27,000. Next, we have our additional materials, which we will add to 27,000, which comes up to about 5,75,100. From this total, we will subtract our normal loss realization. So to calculate our normal loss realization, we have normal loss units of 2,900 and also know that the value of scrapped unit is rupees 10 each. So this will be 29,000. Now we have to add 27,000 plus 5,75,100, and from this sum we need to subtract 29,000. So this will be 5,73,100. Let me make this clear once again. So normally in our FIFO method, we would have taken only materials, which is 5,75,100. And from this, we would subtract our normal loss of 29,000 and write our total rupees of materials as 5,75,100 minus 29,000, which is 5,46,100. This is the case of FIFO method. But in our weighted average method, we also add the cost of opening materials, which is nothing but the cost of opening work in progress. Our equivalent units we take from our statement of equivalent production. For materials, we have equivalent production units of 26,050. So let's write this as 26,050. Our cost per unit will be the total amount divided by equivalent units. This is going to be 5,73,100 divided by 26,050. We get 22 as the cost per unit for materials. Next, we have labor. So again, in labor, we not only take the labor cost of 1,19,150, but we also take our opening labor, which is the labor cost in our opening work in progress. So we take opening labor as 8,000. So we have opening labor of 8,000 and additional labor of 1,19,150. Then we will add these two values to get our total cost for labor. Now this we get 1,27,150, which we will divide by equivalent units, which is 25,430 for labor to get a cost per unit of 5. Finally, we have our overheads. Again, for overheads, we have our opening work in progress cost, which is 12,500. So we will write opening overheads 12,500. Then we have additional overheads, which costs us 1,78,225. Now we will sum these two to get our total amount for overheads. That's going to be 12,500 plus 1,78,225. Now this total amount we will divide by our equivalent units to get a cost per unit of rupees 7.5. So again, emphasizing on the difference between FIFO method and weighted average method so far. In our statement of equivalent production, we will not write opening work in progress in our output column and only in our input column. And for finished goods, we will write the entire amount which is being transferred to the next process. We will not subtract opening work in progress because this is included here in 24,000. And since we have not mentioned it separately in opening work in progress, we do not have to subtract it from our finished goods. Our next difference lies in our statement of equivalent cost per unit, where we also have to add opening materials, opening labor, and opening overheads, which is nothing but the cost incurred in opening work in progress in these three parts of the processes. So what does this mean? In our FIFO method, we would simply take 5,75,100 minus our normal loss 29,000 to get 5,46,100 as our total cost of materials. In our labor, we would have simply taken 1,19,150 as our total cost. And for overheads, we would have taken only 1,78,225 as our total cost, and we would have divided this by equivalent units to get the cost per unit. But in our weighted average method, we are also adding our opening overheads, opening labor, and opening materials to the costs. If this is clear, let's total our cost per unit to see what it costs to make one entire unit. So we add 22 plus 5 plus 7.5 to get 34.5 as our total cost per unit. Our third account is our statement of evaluation. Statement of evaluation has no changes except for the fact that we will not be evaluating the cost of opening work in progress. So normally we would evaluate items such as opening work in progress, finished goods, abnormal loss, and closing work in progress. But in our weighted average method, since we don't know many details regarding our opening work in progress, we will account or evaluate the total cost of only our finished goods, normal loss, and closing work in progress. So first we have our finished goods. So in our element of cost, we have material, labor, and overhead. Then we have our next item, which is abnormal loss. Again, element of cost is material, labor, and overhead. Last and final item is our closing work in progress. Element of cost will be the same, which is material, labor, and overhead. Now let us see what the equivalent units are. So our statement of evaluation is the same in both the methods. There are no changes. So equivalent units we will take from our statement of equivalent production. So for finished goods, we have equivalent units of 24,000, 24,000, and 24,000 for materials, labor, and overheads. So 24,000, 24,000, and 24,000. Our cost per unit is 22, 5, and 7.5 respectively. So we will write 22, 5, and 7.5. We will multiply our equivalent units with our cost per unit to get a total. We will do the same for labor and overheads and sum these three values to get the total amount for finished goods. So our total of finished goods is coming up to 8,28,000. Now for our abnormal loss, materials, labor, and overheads have the equivalent production units of 50, 30, and 30. So let's write this here, 50, 30, and 30. Our cost per unit will be the same, which is 22, 5, and 7.5. We will multiply these. So we have 50 into 22, which is 1,100. We will do the same for labor and overheads. So 30 into 5, 150, 30 into 7.5, 225. We will add these three values, which is 1,100, 150, and 225 to get a total or our value of abnormal loss to be 1,475. Finally, let's quickly do the same for closing work in progress. We have equivalent production units of 2,000, 1,400, and 1,400. So we have 2,000 for materials, 1,400 for labor, and 1,400 for overheads. Our cost per unit is same, which is 22, 5, and 7.5. We'll multiply 2,000 with 22. Do the same for labor and overheads. And finally, add the three values to get our total for closing work in progress. With this, we're also done with our statement of evaluation, and we can move on to our final account, which is our process account. So in our process account, our first item we account for is our opening work in progress. Nothing different from our FIFO method. Even in our weighted average method, we will take the units and amount for opening work in progress from our question, which is 1,000 units and a total of 47,500. Sometimes this total might not be given, and we will have to add the individual values of materials, labor, and overheads given under opening work in progress. But here we are given that opening work in progress, we have 1,000 units and a total of 47,500. So 1,000 units at an amount of 47,500. Next, we have materials. Two materials. So for our materials, we have an input of 28,000 units. So these 28,000 units will amount to 5,75,100 as given in the question. Here, it is important not to make the mistake of taking the value of materials, labor, or overhead from our statement of equivalent cost per unit. So, in our equivalent cost per unit, along with 5,75,100, we have also added 27,000. So, we will not take the sum value for any of these. For example, if we are accounting for labor in our process account, we will write to labor, and for the amount, we are going to write what is in the question, which is cost incurred labor 1,19,150. 1,19,150. So we will write what is given to us in our question from the cost incurred during the year and not from our opening work in progress. So we will not write the cost of labor as 8,000 plus 1,19,150 and write 1,27,150, but we will only write 1,19,150 in our process account because this is different from our opening work in progress. Finally, we account our expense for overheads. So we write to overheads. And again, as I said, we will take the cost only from our question, which is the cost incurred during April 2018, which comes up to 1,78,225. Coming to our credit side, we first have our normal loss. Units we calculated as 2,900, which is nothing but 10% of input, which is 10% of 29,000. We got 2,900. We're also given that value of scrapped units is rupees 10 each. So our normal loss realization will come up to 2,900 into 10, which is 29,000. Next, we have our abnormal loss. Abnormal loss we have calculated is 100, which is actual units scrapped 3,000 units minus normal loss 2,900. We get 100, which is our abnormal loss. So the value for these abnormal loss units we will take from our statement of evaluation. So we have an abnormal loss of 1,475. Next, we have our finished goods. So we have by finished goods, we will leave the units and amount for our balancing figure. Lastly, we have our closing work in progress. We calculated our closing work in progress as 2,000 units. So we will write 2,000 units. And as for the amount, we will take it from our statement of evaluation. So our closing work in progress turns out to be 61,500. So we will write 61,500. So let's sum our units and amount columns to find our finished goods. So we notice our units on the debit side is 29,000 and our units on the credit side is 5,000. This means there is a difference of 24,000 and that will be our finished goods. So here, if you notice, 24,000 is the number of units being transferred to our next process. It is also the number of units we wrote in our statement of equivalent production. So here it will be the same. So in our FIFO method, we realized our finished goods is not the same as what we wrote in our statement of equivalent production, but it is the value which is the units transferred to the next process. But here we know that the value we got or the units we got is the same as our statement of equivalent production and as the question. Now for the amount, we will find the balancing figure, which is 9,19,975 minus 91,975. We get 8,28,000. Now, to check if this is right, this we will not do the same way as we did for FIFO method. There is a different way to check if our answer is right in our weighted average method. So in our weighted average method, our finished goods in statement of evaluation will be equal to finished goods or balancing figure in our process account. So if you noticed, our statement of evaluation, we calculated a finished goods of 8,28,000. Here in our process account, we get the same amount as the balancing figure, which is 8,28,000. So if these two amounts are equal, then our question is correct. Here, I would also like to mention that in our FIFO method, we would add the opening work in progress amount to find if our answer is correct. But here, we don't do that. We simply compare our statement of evaluation finished goods amount to the amount we got in our process account. The reason for this is we didn't take opening work in progress separately here, but it was included in finished goods here. So the finished goods here is inclusive of the opening work in progress. So we can compare our statement of evaluation finished goods with our process account finished goods, and if they match, we got the right answer. With this, we're done with our first question. Let's move on to question number 2. Here is our question 2. Let's first read the question. Following data is available for a product for the month of July 2016. So we have been given particulars for two processes, that is process 1 and process 2. So we have been given opening work in progress, cost incurred during the month for materials, labor, and factory overheads. We have also been given the unit of production for received in process, which is our input, completed and transferred, which is our output or finished goods, closing work in progress, and normal loss in process. We are also given that production remaining in process is to be valued as follows: materials 100%, labor 50%, overheads 50%. So production remaining in process is nothing but our closing work in progress. There was no abnormal loss in process 2. Prepare the process account after working out the missing figures with the help of detailed working, which means we have to prepare all our accounts, which is statement of equivalent production, statement of equivalent cost per unit, statement of evaluation, and finally our process account. So before starting this question, we have to make a few assumptions. So here we have been given that received in process is 40,000. We're also given that the material cost is rupees 60,000. So we assume that there is an interconnection between the two, that the received in process or our input of 40,000 costs us rupees 60,000. Input of material or raw material introduced units is 40,000, which is valued at 60,000. Our second assumption is usually we are given normal loss realization or scrap value realized. But in this question, we are not given. So we will make an assumption that scrap value realized is 1 rupee per unit. Our final assumption is that finished goods of process 1 is the raw materials for process 2. If you notice, we have not been given the amount of materials for process 2. So we are going to assume that our finished goods of process 1, which we will find in our process account, will be the input for the process 2. So if these assumptions are clear, let's go on to solve our question. Another important point to keep in mind is always mention which method you used as a note. It is important to mention any assumptions that we make while accounting. So all these assumptions that we have made, it is always best to mention them and then go on with the questions. So here, I would like to emphasize on the fact that in cost accounting, there is no one way to do it. Many people might do it in different ways, and it is all based on the assumptions you make. So even for your exams, make sure you mention your assumptions and write it down so that everything is clear. So first, we have our process 1. We will write opening work in progress. And we are given that opening work in progress for our process 1 is nil. So in this case, not only our output, but even our input will be 0. So since this is 0, and since this is the weighted average method, we have no percentage or degree of completion. So let's move on to our raw materials introduced. So raw materials introduced is nothing but are received in process. So we have received this and this is our input. So we have 40,000 units valued at 60,000 materials. So this is an assumptions we have written down here. But for now, we need only our units, which is 40,000. Then coming to our finished goods. For finished goods, we will take the amount of units given in completed and transferred. So completed units is our finished units and it is transferred to the next process. So the units given to us is 36,000 for process 1. So we will write finished goods as 36,000. Here again, we have no value in our output for opening work in progress. So we will write the entire figure in finished goods. So we know 100% of the work is completed for finished goods. So let's quickly fill in these figures. 100% of 36,000 is 36,000. Next, we have our normal loss. Normal loss in process for process 1 is given as 2000. So this 2000 is our number of units. So we will write 2000. We assume no amount of work has been done on a normal loss. So we have 0% as our degree of completion and number of units will also be 0. We have not been given anything in our question related to an abnormal loss or an abnormal gain. So let's first account for our closing work in progress. So we are given that our closing work in progress is 2000 units for process 1. So we will write closing work in progress 2000. And as for degree of completion, we have been given that production remaining in process. Production remaining in process is nothing but our closing work in progress is valued as follows. So we have materials 100%, labor 50%, and overheads 50%. So we have 100%, 50%, and 50%. So 100% will be 2000 itself, 50% will be 1000. Let's total our input and output columns to see if we have an abnormal loss or an abnormal gain. So on our input column, we get a sum of 40,000. And in our output column, we also get a sum of 40,000. So since our input column and output column values are equal, this is a case where there is no abnormal loss or abnormal gain. So our statement of equivalent production is completed. Let's quickly sum the units to find our equivalent production units for materials, labor, and overheads. So for materials, we have 38,000. For labor, we have 37,000. And finally, for overheads, we also have 37,000. If this is clear, let's go on to our second account, which is our statement of equivalent cost per unit. So here we first have materials. Unlike our first question, our opening work in progress is 0. So we have no opening value for materials, labor, and overheads. So we will simply write our costs given in our question, which is materials 60,000, labor 12,000, and factory overheads 24,000. So first for materials, we have materials of 60,000. So we will write our material cost as 60,000. So So from this 60,000, we will subtract our normal loss realization. So in our assumptions, we said that we are assuming that our units scrap or scrap value realizes 1 rupee per unit. So we know that our normal loss units is 2000. So our normal loss realization will be 2000 into 1, which is 2000 itself. So subtracting 2000 from 60,000, we get an amount of 58,000. This 58,000 we will divide by our materials equivalent units, which is 38,000, to get a cost per unit of 58,000 divided by 38,000, which is 1.52632. Next, we have labor. So as I said, we have no opening labor costs from our opening work in progress because the question has given us that opening work in progress is nil. So in this case, we will simply write labor cost as 12,000. The labor cost is 12,000 and we will divide this by our equivalent production units for labor, which is 37,000. So 12,000 divided by 37,000 is going to give us 0.32432. Finally, we have overheads. For overheads, we are given a cost of 24,000 in process 1. So we are going to write an amount of 24,000 and units as 37,000. To find our cost per unit, we will divide our amount by our equivalent units to get a cost per unit of 0.64865. Let's quickly find the total of our cost per units. And with this, we are done with our statement of equivalent cost per unit. Next, we have our statement of evaluation. So in our statement of evaluation, this time we have no opening work in progress like our previous question, but this time we also don't have abnormal loss. Since we saw that there is no abnormal loss or gain, we won't account for abnormal loss in our statement of evaluation. So in our statement of evaluation, we will only find finished goods and closing work in progress. So first we have finished goods. Element of cost will be material, labor, and overhead. And then next we have closing work in progress. Element of cost will be material, labor, and overhead. Equivalent units we get from our statement of equivalent production. So for finished goods, our equivalent units are 36,000, 36,000, and 36,000. We will write them in their respective columns. Cost per unit will be from our statement of equivalent cost per unit, which is 1.53, 0.32, and 0.65. So let's quickly multiply our equivalent units with our cost per unit. We will do the same for labor and overheads, and finally sum all these values. We get our finished goods as 89,974.4. Next, for our closing work in progress, for equivalent units, we go to our statement of equivalent production, where we know that our equivalent units are 2,000, 1,000, and 1,000 for materials, labor, and overheads respectively. So we have 2,000, 1,000, and 1,000. The cost per unit will remain the same from our statement of equivalent cost per unit. We are again going to multiply equivalent units with our cost per unit, doing the same for materials, labor, and overheads, and finally summing the three values to get our total for closing work in progress, which is 4025.6. Finally, we have our process account for process 1. So in our process account, we don't account for opening work in progress because opening work in progress is nil or 0. So the first thing we start is with two raw materials introduced. So our raw materials introduced is 40,000 units valued at an amount of 60,000, as also mentioned in our assumption. So we have units as 40,000 and amount as 60,000. Then we have other expenses such as labor and overhead. So labor and overheads, we know that it amounts to 12,000 and 24,000. Coming to our credit side, we first have our normal loss. Number of units we have in our statement of equivalent production, which is 2,000. And as for the normal loss realization, we said scrap value is realized at 1 rupee per unit. So normal loss realization will be 2,000 into 1, which is 2,000. So our units and amount will be the same, which is 2,000. We have no abnormal loss or abnormal gain. So let's write by finished goods. Let's leave the balancing figures for units and rupees. Though we know that units will be 36,000. Then we have by closing work in progress. Number of units we found for closing work in progress is 2,000. The amount for closing work in progress we take from our statement of evaluation. So closing work in progress turns out to be 4025.6. So is equal to 4025.6. This being done, let's sum our units and amount columns to find the balancing figure or the difference to find our finished goods. So we notice that on our debit side, our units is 40,000 and on the credit side, it is 4,000. So the difference between these two is 36,000, which is our finished goods or output mentioned in our statement of equivalent production and in our question where we have completed and transfer units 36,000. Coming to the amount for our finished goods, we will subtract 6,025.6 from 96,000. So our finished goods will be 96,000 minus 6,025.6, which gives us 89,974.4. Now our checkpoint to see if what we did is right is to compare our finished goods in statement of evaluation with our finished goods in our process account. So if you notice, the balance or the amount in our statement of evaluation for finished goods is 89,974.4, which is the same in our process account as well, 89,974.4. Since these two amounts match, what we have done is correct. So with this, we are done with our process 1. Now, what is different in our question 2 is I'm going to teach you how to connect two processes together. So far, we have been learning how to account for one process. But in this question, we have two processes which are consecutive. So after process 1, we have our process 2. So how will they be interconnected and how will we account for them? So again, our next statement will be our statement of equivalent production for process 2. So even for our process 2, we are given that our opening work in progress is 0 or nil. So we will simply write opening work in progress, input 0, output 0. Move on to writing our raw materials introduced. Let's go back to our question to see what we have for raw materials introduced. So we have been given received in process is 36,000. If you look closely, our completed and transferred from process 1 is what is being transferred to process 2. So our output or finished goods of process 1 is our input for process 2. So 36,000 units were our output or finished goods from process 1, and 36,000 is the same input into our process 2. So we will write our raw materials introduced input as 36,000. And as for finished goods, we are given that our completed and transfer units for process 2 is 32,000. So we have our output as 32,000. Next, we have normal loss. Normal loss units is given to us in the question, which is 1,500 for process 2. The question also mentions that there was no abnormal loss in process 2. So abnormal loss will be 0. So we have a normal loss of 1,500 units. No abnormal loss, so we can write our final item, which is closing work in progress. Closing work in progress has not been given in our question. So for process 2, we don't know what the closing work in progress is. So we will find this by totaling the input and output columns and finding the difference. So on our debit side, we have a sum of 36,000, and on our credit side or on our output column, we have a sum of 33,500. So the difference will be our closing work in progress. And this is the reason why we were given abnormal loss is equal to 0. In case abnormal loss was not mentioned that it is 0, we wouldn't have been able to find closing work in progress because we would have two particular items and we can't find two different items by totaling and finding the difference because we wouldn't know what amount goes for what. So as abnormal loss was given as 0 or that there is no abnormal loss, we can find closing work in progress by finding the difference between input and output. With that being said, let's quickly write our equivalent production units for finished goods, normal loss, and closing work in progress. So for finished goods, we know 100% work has been completed for materials, labor, and overheads. So our units will be 32,000 in all three cases. Coming to our normal loss, we know degree of completion, or we assume that degree of completion is 0 because no work has been done on our normal loss units. So here I would like to mention that even if they have mentioned in the question that normal loss, some percent of work has been completed, we always take degree of completion for normal loss as 0. Coming to our closing work in progress, we will take the same percentages for process 2. So in our process 1, we took closing work in progress, degree of completion to be 100%, 50%, and 50%. We will take the same for process 2. So we have for materials 100%. For labor and overheads, we have 50%. So 100% will be 2,500. 50% will be 1,250. So our labor and overheads will have a number of units as 1,250. Let's quickly sum our number of units. to get the equivalent units for materials, labor, and overheads. So after summing all three, which is materials, labor, and overheads, we get our equivalent production units as 34,500 for materials, 33,250 for labor and overheads. Next, we have our second account, which is our statement of equivalent cost per unit. So in our statement of equivalent cost per unit, we first have materials. So for materials, our amount will be the amount of finished goods that we had from our process one account. So as I already mentioned, and in our assumptions, we assumed that finished goods of process one is the raw materials for process two. So I already mentioned this. So the amount of finished goods for process one will also be the amount for materials in our process two. So our materials or cost of materials will be 89,974.4. This is our cost of materials. From this, we will subtract our normal loss realization. So for normal loss realization, we have number of units as 1,500, and we have assumed that scrap value realized is 1 rupee per unit. So our normal loss realization will be 1,500 into 1, which is 1,500. So by subtracting 1,500 from 89,974, we will get an amount of 88,474.4. Our equivalent units for materials is 34,500. To find our cost per unit, we will divide our amount by equivalent units. We get an amount of 2.56448. Next, we have labor. So for labor, our amount or cost for process 2 is given as 16,000. So let's quickly go and write our labor expense of 16,000. Equivalent units is 33,250. And we find our cost per unit in the same way by dividing our amount by equivalent units to get a cost per unit of 0.4812. Finally, we have overheads. Our overheads cost is 20,000. So we will write 20,000 as the cost. Equivalent units from our statement of equivalent production, which is 33,250. And we will find our cost per unit. The cost per unit turns out to be 0.06015. So we total this to find the total cost per unit. Here, I'm once again going to mention that in our weighted average method, if we have opening work in progress, that is, in this question, we don't have an opening work in progress, or we have been given opening work in progress is nil. But in case we have an opening work in progress like our previous question, then we will write opening materials, opening labor, and opening overheads in our statement of equivalent production. And these opening costs will add to the total cost of materials, labor, and overheads while calculating cost per unit. So always remember, like we saw in our question 1, we added opening materials, opening labor, and opening overheads to find our total cost. So we add opening materials to and then additional materials from which we subtract normal loss. For the case of labor and overheads, we take opening labor or opening overheads and add the additional labor or additional overheads. But in this question, we have no opening work in progress, so we simply take our labor cost and overhead cost. Let's jump to our third account, which is our statement of evaluation. So in our statement of evaluation, again, we have only two items like our previous process, which is finished goods and closing work in progress, because once again, we have no abnormal loss or opening work in progress. So first, we have finished goods. Element of cost will be material, labor, and overheads. Equivalent units we will take from our statement of equivalent production. So for finished goods materials, our equivalent units is 32,000. And so is the case for labor and overheads. So we will write 32,000 in all three cells. Cost per unit we will copy from our statement of equivalent cost per unit. And we will multiply our equivalent units with our cost per unit to find the total costs. We will do the same for labor and overheads. And finally, add the 3 to find our total amount for finished goods. With this being done, let's do our closing work in progress. We have material, labor, and overhead. Our equivalent units for closing work in progress, we again take from the statement of equivalent production of process 2. So our closing work in progress is 2,500, 1,250, and 1,250. So 2,500 for materials, 1,250 for labor and overheads. Our cost per unit being the same, we have 2.56, 0.48, and 0.06. We will multiply our equivalent units with our cost per unit again. Do the same for labor and overheads and find the sum. And once this is done, we can move on to our last account, which is our process account for process 2. So here we have our process 2 account. Again, we have no opening work in progress. We will not write to opening work in progress. Our first item or particular will be to raw materials introduced. So our raw materials introduced for process 2 will be the finished goods of process 1. So our units is going to be 36,000 and the amount is going to be 89,974.4. Next, we have our other expenses such as labor expense and overhead expense. So in our question, we are given that labor expense is 16,000 for process 2 and factory overhead expense is 20,000 for process 2. So we have 16,000 cost for labor and 20,000 cost for overheads. Next, we have our normal loss realization. Number of units we found for normal loss is 1,500. Since we assumed our scrap value to be ₹1, our normal loss realization will be 1,500 into 1, which is 1,500 itself. We have no abnormal loss in this case. So next we have buy finished goods. Finished goods, we're going to leave units and rupees, though we know our units for finished goods is going to be 32,000. Lastly, we have closing work in progress. So our closing work in progress, we found out units as 2,500 and amount we take from our statement of evaluation. Always remember, from our statement of evaluation, we take amounts only for closing work in progress, abnormal loss or gain into our process account. We don't take the amount of finished goods or opening work in progress in the case of FIFO method. So now that we are done with closing work in progress, let's total our units and amounts to find the difference and our finished goods. So we notice that the units on the debit side is 36,000 and on the credit side it is 4,000. So which means there is a difference of 32,000, which will be our finished goods. This 32,000 is the same 32,000 that we have here as finished goods in our statement of equivalent production, and is also the same 32,000 that was given to us in the question as completed and transferred in process 2. Now coming to the amount of our finished goods, we have 1,25,974.4 minus 8,587.88. 8,587.88. Now for our checkpoint, or to check if what we did is right and if we have got it correct, we need to compare our finished goods in our process account and in the statement of evaluation. These two figures are equal. We got it right, but oh no, we have different figures in our statement of evaluation and in our process account. So in our statement of evaluation, we have an amount of 99,386.5, and in our process account, we have a figure of 1,17,386.5. Now, I did this on purpose. So I just want you to know how it would look like if you went wrong somewhere and how you can go back and rectify or change this mistake so that you get the question right. So if you got it wrong, this value and this value will be different. So now let's go back and see what we did wrong and change it. I notice our first mistake here, which is our cost of overheads. So in our question, our cost of overheads for process 2 is mentioned as 20,000, but we have typed a value of 2,000. So we're going to change this as 20,000. So once I change this to 20,000, you will notice the cost per unit will change from 0.06 to 0.6. So once this changed to 0.6, our value of finished goods will change to 1,16,710, and our closing work in progress will change to 7,764.57. So now that these two have changed, let's quickly go back and calculate our finished goods or balancing figure once again. So we will have 1,25,974.4 minus 9,264.572. So by doing this, we get 1,16,709.8. Now let's compare this with our statement of evaluation. Here we have 1,16,710. Let's find out what this would be if there were decimals. And we have the same figure for both. So in our statement of evaluation and in our process account, we get a figure for finished goods as 1,16,709.8. And now since these two figures match, our question is right. And with this, we are done with question 2 as well. You can find and download the solutions to the problems we solved in today's video in the description below. Today, we have learned equivalent production using weighted average method. And in the next video, we will cover the last part of process costing, where we will discuss a few unique questions from the exam point of view. Don't forget to take the quiz in the description below, because you might have a chance to get a mention in my future videos. I take accounts tuitions for 12th CBSE. So if you're watching this video and have any siblings or friends in 12th who are looking for accounts tuitions, then do ask them to hit me up for more details. I'll leave my email ID and the link to the Google form in the description below. That's it from my side for today's video. If you have any doubts, please do ask them in the comments below. I will reply to all your doubts. Do like and subscribe. I will see you all very soon.